A warm welcome to the LB Finance Annual Report for the financial year ending 31st March 2021. I present to you the Managing Director's review contained in the 2020-21 Annual Report, which I will narrate on behalf of Mr. Sumit Adhihetty, Managing Director of LB Finance plc. Operating context. It is perhaps the first time since World War II that the entire world was thrown into chaos, as no country was spared by the rapid surge of the COVID-19 virus throughout 2020 and over into 2021. With nations around the world focused on controlling the spread of the virus, global trade and economic activity took a back seat, even coming to a virtual standstill in many parts of the world. In Sri Lanka, the first signs of COVID-19 emerged just after the local economy was regaining its balance after the Easter Sunday attacks had shaken the country to its core. Government efforts to lock down the country in a bid to curb the spread of the first wave of H virus, while commendable, had far-reaching consequences which saw Sri Lanka's economy contracting by 3.6% in 2020. The SME sector, despite recording good growth in recent years, continues to remain highly vulnerable to economic shocks and as such was among the worst affected by the pandemic-induced economic downturn. The impact on the SME had a cascading effect on the NBFIs, which have long been the key enablers of the SME sector growth. Seeing as SMEs were unable to service their debt commitments, NBFIs were confronted with the prospect of higher non-performing loans. To add to this, the NBFI sector's core leasing model also came under pressure owing to the vehicle import ban introduced by the government as part of its fiscal control measures aimed at softening the impact of the economic downturn. Burdened by higher NPLs on one hand and limited opportunities for credit expansion on the other, the NBFI sector recorded a highly diluted performance in 2020. Taking decisive action. Although we entered the current financial year in lockdown, I am pleased to say that thanks to swift action taken at the onset of the shutdown in mid-March 2020, our people, including our call center teams, were geared to work remotely and continued with business as usual. Meanwhile, seeing our lending activities hampered during the lockdown months, we quickly shifted gears to focus on recoveries. Recovery efforts began in earnest at the start of the lockdown, with all frontline teams being called in to drive the effort. The momentum was maintained throughout the year with the support of the Recoveries Unit and the call center teams. These collective efforts helped to stabilize NPLs to a great extent. And it is indeed very encouraging to note that at 5.36%, LBF's NPL ratio was well below the sector average as at 31st March 2021 and also among the lowest recorded in the NBFI sector as of the same date. Noting a gradual revival in economic activity during post-lockdown, we resumed many of our lending activities. In our core auto finance business, we redirected our attention to capitalize on the strong demand for registered vehicles, which had ballooned overnight following the complete ban on unregistered vehicle imports. I must admit that while the consistently low interest rate would have been an excellent opportunity for LBF to grow its loan book, we nonetheless decided to maintain a prudent lending strategy in light of the underlying market weakness. The ongoing repossession ban was another key factor that influenced our decision to be ultra-cautious in our lending this year. As a dynamic organization, we continued exploring potential opportunities. Observing a robust demand for gold loans on the back of higher world gold prices, we moved quickly to expand our bandwidth in this space. As part of this overall effort, we invested in strengthening LBF's island-wide gold loan footprint. As always, we remained firm that deposit mobilization activities should reflect the company's liquidity requirements. With the company's liquidity at healthy levels throughout the current financial year, we did not pursue aggressive deposit mobilization activities and instead looked to consolidate our deposit base. We are, however, quite proactive in our efforts to leverage on the low interest rate to streamline our deposit mix and benefit from lower funding costs. It is very pleasing to see our overseas operation, LB Microfinance Myanmar Company, LBMF, making excellent progress in the year under review, notwithstanding pandemic-related challenges. Having first started up in the small town of Phi in the Bago region, LBMF has since been deepening its penetration into the Magway region. In the year under review, LBMF further cemented its presence in the region with 4 new branches being added to the network, bringing the total branch count to 12 as at 31st March 2021. Key financial highlights. Supporting stakeholders to navigate the pandemic. Having entered the current financial year in the midst of the nationwide lockdown, our priority was to ensure our customers would be supported during these critical times. We began by assisting eligible customers to benefit from the debt moratorium scheme announced by the government to bring relief to COVID-19 affected individuals and businesses. Beyond this, we also accommodated customer requests for reschedulments, fee waivers and grace periods on a case-by-case basis. Moreover, determined to ensure our customers stay at home and stay safe, we rolled out a series of upgrades to the LB SIM mobile wallet. Some of the new features include the mobile reload option and the settlement facility both for retail customers and the direct debit facility for business users. The safety and welfare of our valued employees took on a whole new meaning during the pandemic. As you know, we issued strict instructions that all employees should work from home during the lockdown. To help our employees adjust to this new normal, we launched Smile, a 24/7 counseling hotline for employees to reach out in confidence should the need arise. Meanwhile, all recommended health guidelines were implemented to enable employees safely return to work in batches from June 2020 onwards. While a health declaration form was introduced and all employees asked to update their safety status on a daily basis, I am also very pleased to announce that no COVID-related retrenchments or pay cuts were declared at any point during the year, and all LBF employees were paid their full salary entitlement throughout the financial year. Despite strict cost containment measures deployed across the business, employees' bonus entitlements for the previous year were paid in full, while medical expenses were also fully reimbursed. Building resilience for the future. With many things around us changing, we looked inward to strengthen our systems and processes, which helps us to face the future with confidence. Despite the constraints imposed by the pandemic, I am happy to report we made progress on many fronts. A new credit policy framework was developed and rolled out to create a foundation to promote more high-quality lending. We were able to complete our data warehousing project and increase the degree of automation across the business in order to promote greater cost discipline at a business unit level. We also began working on a new data protection procedure in readiness to comply with CBSL's proposed new Data Protection Act, due to be gazetted in 2021, and went ahead with new protocols to strengthen our information security architecture aimed at building our defenses against cyber attacks. In parallel, our primary data center was shifted to Sri Lanka Telecom Tier 3 data center located at Pitipana, while a secondary backup data center was created at the Dialog facility in Pothuarava. Commissioning of the LB Center for Technology and Innovation, CTI, was another huge milestone for the current financial year. The CTI is resourced with a team of specialist data scientists focusing on developing customized solutions to boost our operational capability and network capacity, which I believe will play a vital role in strengthening LBF's resilience in the years to come. Going forward, with Sri Lanka now in the throes of a fully blown third wave of COVID-19 infections, it seems obvious that the pandemic is something we have to live with for some time. On this basis, it can be assumed that more challenges are likely to materialize in the coming months. Nonetheless, having emerged relatively unscathed from the pandemic impact thus far definitely puts LBF on a firmer footing to tackle what lies ahead. One thing I can already foresee is the fierce competition LBF will probably face in the medium term, as NBFIs rush to take advantage of the record low interest rates to capture a larger share of the SME market. This is where I believe LBF's solid credentials and track record 50 years will prove to be a distinct advantage. Going forward, we expect to remain fully focused on supporting SME sector growth. We have set out ambitious plans in this regard and have even commenced talks to secure a special USD credit line to empower the SME sector to reach its true potential and position itself as the backbone of the Sri Lankan economy in the years ahead. Appreciations. While readily admitting that the strategic choices made last year have underpinned LBF's progress, the ability of our people to adapt to innovations, I believe it has made all the difference in helping the company to ride out the difficult times. On this note, I wish to extend my deep appreciation of all LBF employees for the unity and strength shown during these unprecedented times. My sincere thanks also goes to the Chairman and Board of Directors as well as the Board and committees whose decisiveness and vision have contributed to the resilient organization we are today. I am deeply grateful to LBF's loyal customers who have been a pillar of strength not only in this past year but over the past 50 years. On behalf of everyone at LBF, let me say that we consider it an absolute privilege to serve you. I wish to take this opportunity to thank the Governor of the Central Bank of Sri Lanka and the officials at the Department of Supervision of Non-Bank Financial Institutions for their support extended during the course of this year as well as in the past. Finally, I would like to express my appreciation to our shareholders, bankers and other stakeholders for their unwavering support. I look forward to your patronage in the years ahead as well.